Hello friends, Rajesh here from Miss Data. So this is the weekly market review for week starting December 6, 2021, right? So let's start from the global market indexes, how it's looking like. So as we clearly see here, um, S&P 500, which is this over here, is this is the S&P 500 index. So this is getting into correction mode as of 312, right? So it was under pressure on 212 and 112 and 3011. So for last 3 days it was under pressure and it moved to a correction mode as of 312, as you see here, right? And also we can clearly see NASDAQ, which is the first item here. NASDAQ, the selling pressure is increasing from U2 to U3. That means we see a lot of selling patterns. More and more patterns are occurring from a selling perspective, right? So Dow, which is the middle one, is still under pressure mode, right? It could turn into correction mode easily, right? And all the other markets remain same for the last 2 days. Nothing pretty much changed here. So it is all under correction or pressure, right? So this is pressure, 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 pressure. Rest of all the markets, global markets, are under correction, and we are getting into that zone very soon, right? Again, this is all what we see in the market, right? What is going to happen in the market, nobody can predict, but this is what we see in the market. A lot of selling pressure everywhere. We see a selling pattern, huge selling pattern, not a small selling ones, right? So these are all huge volumes. So this is what it looks like, right? As of 312, we got more evident statistics which says our market is slowly moving into the correction mode, right? How low it could go, that depends on how the bulls are defending the market on a day-to-day basis, right? So that is how it's going to be, right? So this is the global market quickly. Let's quickly go back to our individual indexes and see some key levels. So let's start with NASDAQ here. So NASDAQ last week, if you have seen that review video, we have given that predictive analysis level 1. This is our level 1 here, and this is our level 2. Okay, so level 1 and level 2 markets are well within that levels. So we mentioned in last week's review, if this zone is broken, right, this zone, right, is broken, there is a high likelihood that market can reach up to this zone, right? That is what we are expecting, and that's what it looks like. It's leading towards. There is still some space here, right, to come down easily, right? Easily, with what all the other global market statistics we are seeing, the markets could easily fill this gap next week. Okay, this is again a probability, right? I'm not saying market is going to go down. This is a high likelihood probability that, based on the global market statistics we saw, there is a high likelihood that this market can go up to this zone, right? This zone here, right? If at that level we need to look at the reaction, that is very important, right? For every level we look at how the market reacts, whether the bulls are able to defend the market at that level, or whether the bears are able to push the market further down, right? That's very important. That happens not in between this zone here, right? It happens only at the key levels, which is this, right? This is the key level we are looking at, right? So the key level is 15,300, right? That is what we last time also we talked about. 15,300 is the key level which we are looking at. If that level is broken or offered, right, then we are looking at easy target of this levels over here, right? Easy target, right? This level is 14,400, right? This level here is 14,400, okay? So I don't see any other support in between these levels, right? Between this and this, there are absolutely not a big support. So market, if pressure continues on the global market space, this market can pull back easily up to this level, right? So what is the range we are looking at? Okay, at a high level, from here, this is the highs. Probably this is the highs we are looking at. This is the highs, right? And this is the current state we are looking at, current close. Okay, this is close to this range is close to 7%, right? So if this 7% bulls are not able to defend this 7%, this could easily take us to another 7% of correction, right? So this is close to another 7%, okay, approximately, right? So 14% of correction is what a healthy correction, right? 14% is a healthy pullback. So we could expect in this market, okay? But again, that is not based on what we see here. That is the overall picture, right? So based on what is going to happen at this level, right, we will see whether this next 7% is a probability or not. It is a probability game, right? Based on so instead of guessing it, the only thing what we are trying to do is we are looking at the statistics, numbers, internal data, right? And then trying to uh, you know see where the markets are leading. Okay, two things we are clearly looking at before we say whether it is going to go in up or down, right? One is the key levels, we are seeing it perfectly, we are looking at the key levels. Two is what is the play here, the price action here on each and every candle here, right? What is the price action, right? How it is happening. And the three is how the global markets are performing, and also how other stuffs like options, futures, put call ratios, daily new highs, lows, and all performing, right? That's statistics, right? So based on that statistics, we are trying to see where the market is going. That is all we are doing, right? We are not guessing or anything like that, right? This is not a guess. This is the actual what is happening. Based on that, we are trying to see where it could lead to, right? And that's all we are doing here. Okay. So that is what this is, right? So 7%, another 7% could be a potential if it fails to get support at this level, it could easily go to 14,400, right? So if it comes to that level, then we can talk about what is the next level it could go if it reaches 14,400, right? Then we can see. I think I put another zero here. Yeah. Oh, correct only, right? Yeah, that's correct. Okay. So 14,400. Yeah, 14,400 here only, right? 14,400, right? So 14,400, these two levels we are looking at. Let's see how it works out. Okay, so this is for NASDAQ. So NASDAQ has clearly some room to go to get defended at the lower level, and based on that we will see how it goes. Okay, so this is for the NASDAQ. Okay, two levels, key levels to watch for NASDAQ is 15,300 and 14,400, right? So let's look for that and see how it works out, right? And then the next one is ES, that is the S&P market. Let's look at this one. So this one, as we expected, right? Last week when the markets were at this level, we were kind of thinking if this breaches this midpoint, right? This midpoint, it could easily come up to this lower band, right? And that is exactly what happened. So if it cannot hold this midpoint clearly, and our predictive analysis level is also there, it cannot hold that level. That means it is an easy target for this level. So as I mentioned, in my portfolio, I took a hedge on this candle, basically 25% hedge on this candle. And on the first day I was profit, and the next day it was kind of pulled back a little, and then overall it is, yeah, helping us. That hedge is helping us because the market is now right now at here at this point, right? So that is a good thing. It is at this level, so there are some defense action we can see here, but the problem is we see as per the global market, that table we saw, this was a huge selling here, right? So it adds up to the selling pressure, right? So markets can easily pull back up to this zone. So here is the midpoint and here is our predictive analysis levels. So this zone is a very easy target for S&P 500, right? So we said last week, if it reaches this level, right, this level, it could easily come back to this level, and exactly that is what happened, right? So it was not able to sustain this levels, right, this levels. So it came back to the lower level. Right now we need to see if it's able, if the bulls are able to defend this level, right? If they are not able to defend this level, then market can easy target of this zone, right? And this zone is considered to be one of the supply zone, right? Demand zone, right? So from this place, markets, bulls can come in and defend and take the market again back up to the next levels, right? So that's what we are clearly seeing. If this level is broken and the next zone is, as you see clearly here, this is our next zone of, play, right? We need to see. So if this level is broken, so this is the first level we are going to keep watch on for 4400, right? Let's say 4400 is the first level. This is the level. And the second level is this level, right? 4275, right? So if this level is broken, easy target of here, right? This zone can come back, right? And again, it is the same percentage wise. If you look at it, it is the this 7%, and if it fails to hold, another 7%, right? 14% of pullback or correction, whatever it is, right? So that's the levels we are looking at. Two key levels: 14400, 14275, right? 14400 and 14275, right? Those are all the two levels, key levels we need to watch for S&P 500, right? Similar pattern as of NASDAQ. Nothing really changes here. Similar pattern, okay? So that is the only thing, but the only difference is it is already approached the lower band of a bull run, right? So if that is offered, then definitely it is going to come to this zone for sure, right? This zone is not an easy zone to take off, right? So this is a very difficult zone to take off. Very high resistance support. This is a very high level support. So we have to see how the bulls are reacting at this level, and then we'll make a call whether this is going to come down here or not, right? So that is what S&P 500 levels we are looking at, okay? So as I mentioned, if this level is breached, right? So for example, this level is breached, probably I may enter a 50% hedge at this level, so that I will probably take off the hedge when it is defended at this level. If this level is offered, then I will take a 75% hedge until this level, right? So until this level, I hold my 75% hedge. And then if this level is broken, that is a different story altogether. But yeah, let's see. This is a very tough target to break, right? So let's see, right? So, okay, cool. Next, let's look at OIM. This is Dow Jones, by the way. So Dow Jones is the weakest of all, right? So as we clearly see, it is out of its upward trend long time back by, I think almost on September. It's out of it came below the upward trend, right? And after that, it never, it was never able to get back into that upward trend, bull trend, okay? So it is weakest of all. So as we clearly see here, it is at our L1. This is our L2. So it's getting defended at this level. If this level is offered, okay, if this level is offered, we can clearly see where it is going to come, okay, this one, okay. So this is a key point for us, like 34,170, right? If this level is offered, right, then we are looking at 33,400 easy target, right? So that is what this is looking at right now, okay. So again, out of all the markets, this has the biggest pullback, right? NASDAQ, and comparing NASDAQ and S&P, this has the biggest pullback. So we can easily see it can pull back up to this levels if the market remains at this pressure of selling, selling mode, right? And those are all the key levels we are looking at. So again, as we always say in our groups, meetings and all, let's try to, if you want to enter, yes, you can, but do it in a phased approach, right? So because nobody can ever tell what is the bottom, right? We can only say up to where it will go next, but we cannot say this is the final bottom, right? Nobody will be able to say that, right? So be careful. So but every level like this, okay, it is better to create a hedge or enter a long-term position little by little, right? So it's a percentage, right? Don't enter 100% in, right? So you can take some long-term positions here little bit and wait for the market to pull back again, because there is no clear evidence that market can go up at this point in time. So enter 10% here, right? If you want to enter, if you want to take a hedge, enter 15% hedge, right? And then wait for the market to pull back. If it pulls back to this level, enter another 10% of your long term, right? And another 15% of hedge, take it if it breaches this level, right? So those strategies, what we kind of talk every week, we have to consciously follow to make sure we are not getting into the trap of the black swan event, right? So we have to be really careful with what we see on the charts, what we see on the data, and then go by the data, not by the news, right? This is all by data, right? News is happening, everyday news is happening. So we go by data, not by news, right? So whatever data says is a reflection of the news, right? So we go by data, so definitely we can't go wrong, right? So that's it, guys. So we'll see next week in the market review. Until then, thanks, take care, have a safe trading environment, and keep learning, right? That is very important. Keep learning and do well, okay? Happy trading, guys. Thank you.